Hello and welcome back to the channel. Today I have an interesting video for you all, and it's something different. Today we will calculate the fair value of Meta Platforms, aka Facebook. At the moment the stock price is $237.09. We saw a lot of volatility on the stock, and especially after the last earning release we saw a huge drop in the stock from $323.38 to the level of $237.08. For this we need to take a look at the financial of the company, take a look at the income statement revenue. For this we are using Yahoo Finance. So we will be checking the top line, which is the total revenue for the last 4 years and the trailing year. We need also to take a look at the net income, which is the bottom line for the trailing year and the last 4 years. Also we need to take a look at the cash flow for the last 4 years and the trailing year, and the capital expenditure as well for the same period. Without ado, let's jump into the discounted cash flow template that we will be using for calculating the fair value of the stock. This is the template that we'll be using for calculating the fair value of Facebook. Here we have to enter the data of the operating cash flow from 2018 until 2022. We took, as we said, the number from operation cash flow statement on Yahoo Finance. We see that the operating cash flow for 2018, the numbers are here, are in billion, 29,274,000,000, and the capital expenditure was 13,910,000,000. So the free cash flow to equity is 15,364,000,000, and same thing for the other years till the 2022 trailing year, which is 57,863,000,000 for the operating cash flow and 18,567,000,000 for the capital expenditure. We calculate 39,116,000,000 for the free cash flow to equity, and we need to input the revenue. So the revenue for 2018 was 55,838,000,000, and the net income was 22,112,000,000. The trailing year is 117,929,000,000, and the net income was 39,370,000,000. Here we need also from this number to calculate the net income margin. For 2018 the net income margin was 39.60%, for 2019 26.15%, and for 2020 33.90%, and for 2021 is 33.38%, and for 2022 is the same number. We have the average net income margin is at 33.28%. The ratio of free cash flow to the net income is 69.48% in 2018, 114.75% in 2019, 81.08% in 2020, 99.35% in 2021, and the same number we are using for the trailing 2022. And the average free cash flow to the net income is 92.81%. And we see here the revenue growth margin is at 21.35%. So here we start our forecast for the forecast revenue for the next year, which is 2023, and the year after. We take these two numbers from Yahoo Analysis. Revenue estimate for the year of 2023, 158,340,000,000 for the next year, which is 2020, for the next year 2023. So we log the number here, and for 2024 we will take a conservative value. By other means, we will say that Facebook is stopping this year, and on 2024 Facebook will make less revenue compared to 2023. We log these two numbers, and the template will calculate the expected forecasted revenue until 2030, and here we log our growth rate. So we will be expecting that from 2023 to 2025 Facebook will grow by 3%, and from 2025 to 2028 Facebook will grow by 3%. Facebook is a mega company, and so we don't expect a wide growth, even though we can find other sites and analysis. They are giving bigger numbers. For our case, we want to be on the safe side and use conservative and reasonable numbers. After logging these two numbers, the template will calculate the projected earning, the forecasted earning in the futures, and then we will log in the net margin, what we calculated here by which it was 33.28%, and the free cash flow to net income ratio, which we calculated at 92.81%, and automatically the template will calculate for us the forecasted net income and the forecasted free cash flow to equity in the future. We take the free cash flow to equity forecasted in the future, and we log it inside our three cases. So basically here we have three cases: a normal case and for Facebook, and a bullish case for Facebook, and a bear case for Facebook. After logging the forecasted free cash flow in the future, we will log in our requirement. We want a rate of return of 10% on our investment, and we will expect that the perpetual growth of the company is 2.5%. We log in also here the total share outstanding, and we have a fair value for the stock, which is $243.43. For our bull case, we do the same thing, except of our rate of the rate of return that we are requiring will be always 10%, but we will expect a bigger perpetual growth in the future with 3%. So if we are bullish on Facebook, the fair value for the stock will be calculated at $253.89. And the bear case, our requirement of return will be always 10% on our investment, and we will log in a lower perpetual growth, which is 2%, and a fair value for the bear case will be $234.27. We take all the three cases and we will log in some kind of probability. So for the normal case, we will affected by a coefficient of 50%. So we are saying there are 50% chance that the normal case will happen, and 25% chance that the bull case will happen, and 25% that the bear case happen. And the average fair value for the stock will be $243.75. At the moment, Facebook or Meta Platforms is trading at $237.09. So we can say that Facebook is trading now at a discount. We will be doing more and more this kind of videos in the future. Write in the comment if you have a specific stock that you want to calculate its fair value. Thank you for watching, thank you for listening, and talk to you soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.